Sam thought that if his influence was secret, it was like more ethical, but that's not how anything works in reality, right? Like if you're giving somebody money, you have to be transparent about it. This is, I think, a good example of him just like, even though he poses as this genius, he's actually kind of a fucking idiot.
Hi guys, welcome back to part 2 of our exciting conversation with David Morris, author of the upcoming book, Stealing the Future, Sam-bankman-fried, Elite Fraud and the Cult of Techno-Utopia. In today's episode, we go into more detail about Will MacAskill and Effective Altruism, cover Dan Friedberg, Justin Sun, and much, much more. Enjoy.
But most of the money was going to institutes, to scholarships, to think tanks that promoted and thought about effective altruism itself.
Oh, God, yeah. So, just like a propaganda machine. And in fact, Sam took a lot of stakes in like crypto media companies as well. Just he knew that media was key to portray a persona. Yeah. So, you know, was it Block? I believe Block, he gave McCarthy, was it McCarthy? Right. Like $28 million. I forget his name. Mike something. McCaffrey, I think. Yeah, McCaffrey. Yeah, McCaffrey.
That's a terrible story, man. Yeah. I mean, and this is like a great example of, again, where Bankman-Fried doesn't listen to anybody, and so he does things in this way that is just so much worse. I mean, the Block situation was Mike Dudas, who's a friend of mine, founder of the Block, to my knowledge, is a great guy, and he built this important institution. But he's a venture capitalist and founder, and he basically chose to sell to his employees. He saw an opportunity because Mike McCaffrey came along and he's like, you know, my parents are wealthy, is what he told Mike. Okay. And I have $36 million, so I'm going to buy the company from you. It turns out after the fact that was a secret loan from Sam Bankman-Fried, not even to the Block really. Partially there was, I think, other money that did go into the Block, but basically he made
directly to him.
To Mike McCaffrey. Also, like, gave part of the loan was spent by McCaffrey on this like $10 million house in the Bahamas to be close to FTX. Yeah. And after the fact, I believe Bankman-Fried actually commented on this and said, you know, his intent in making this like a secret loan, or maybe this was McCaffrey's rationalization, was like, we don't want the journalists to know where the money is coming from, so it doesn't impact, which is like, there is a certain logic to that, but that's not how it's done in the industry, right? Like, the secrecy versus transparency of influence thing is one of the interesting questions here, where like Sam thought that if his influence was secret, it was like more ethical, but that's not how anything works in reality, right? Like if you're giving somebody money, you have to be transparent about it, or then you're really unethical. Right. And so like this is, I think, a good example of him just like, even though he poses as this genius, he's actually kind of a fucking idiot, which is a direct quote from the book. He just doesn't know anything. And he's just surrounded and propped up by this network of people like...
And Barbara, what a key one was Barbara Fried, his mother. And she instigated the fact that he had to do a straw donor, wasn't it? Taking through her own funds. So she's helped. Potentially, she was one of the individuals who gave Sam the idea of hiding, hiding the source of funds. And that, I would love to hear your thoughts on that.
Yeah, I mean, and this is why, you know, Nick Carter frequently refers to them as the parents from hell. And it is like, from the outside looking in, and this is why it's so frustrating that Michael Lewis did not do anything more meaningful with his access, but... It's how access journalism works a lot of the time, is that you get it because you're not going to say anything critical.
Yeah, absolutely.
But like, yes, we have emails from Barbara Fried where she's advising the use of a straw donor. And this is, you know, she wants to be able, like literally in the email that we have a record of, she's joking like, we don't want this to look like all the money is coming from Sam. We don't want it to look like this is just a family shop or something like that. So we're going to make this loan to Nishad and like make it look like there's this guy Nishad saying like, this is, I'm paraphrasing, but this is essentially like in the email that she sent is like, let's do this fun little campaign finance fraud. I should be clear, like it's not even obvious that what she's talking about would have been, I mean, it could have been convicted criminally, I'm pretty sure. Yeah, but sure, like the law in the U.S. unfortunately is very bad right now. So dark money of various sorts is legal effectively, and you know there's all of these dark money pools where the disclosure requirements just aren't there. So like it's actually like a little ambiguous whether what she's advising, or at least I haven't gotten an expert opinion from a campaign finance lawyer despite considerable effort. I've not been able to get anybody on the record to comment on this, but she was definitely advising deception. But the reason we will never get a real legal outcome on that is because Sam was charged with campaign finance fraud, but as sort of a basically legal technicality of his extradition from the Bahamas, they had to drop that charge, and they had to actually also drop criminal charges of foreign corrupt practices because he was also alleged to have bribed some Chinese officials. Those came up at trial, but he was not charged with those formally. So those were dropped, and that was where Barbara's actions would have probably been litigated as possibly even a co-conspirator. The other aspect of that is it's not just Barbara, although she was most involved, but, Joe, the thing that blows me away about Joe Bankman is that he was instrumental in hiring this guy named Dan Friedberg as FTX's chief counsel. Crazy. And Dan Friedberg was publicly known to have been involved in a major online fraud circa 2015 to 2018, I believe. He was a lawyer for a poker website called Ultimate Bet. And Ultimate Bet was found to have done something very similar to what FTX did, which was they actually used cheating software to cheat their customers. So like, online poker is no longer really a thing because it was made illegal kind of after this was discovered. But for a while, you could gamble with real money online. But Ultimate Bet was cheating by looking at other players' cards and using software to help certain people just win again and again. And these were like executives at the company who were betting against their own users, just like Sam did 10 years later or 5 years later. Yeah. But already before he was hired at FTX, Dan Friedberg had been taped and the tapes had leaked of him advising the Ultimate Bet team how to cover up their crimes effectively. He was never implicated directly in the crimes themselves, but he was very much involved in the cover-up, and that was known. And so why, if you are Joe Bankman, you're a Stanford professor, you're a Stanford legal ethics professor, and the guy you recommend to head international legal supervision for your son's cryptocurrency exchange has already been on tape advising somebody on how to cover up a fraud.
Yes.
That is weird. I'll put it mildly.
Weird.
I'll put it mildly.
And I think, weird. In fact, it was the famed short seller, Mark Kohidis, I believe in August or earlier July. And he literally said that's the smoking gun, I think, before it all unraveled.
And I owe Mark several apologies because I have never really engaged with the fact that he was ahead of the curve. He was one of the few. So yeah, big shout out to Mark Kohidis.
You're right. Yeah, no, I think that he mentioned about the Dan Friedberg situation. I mean, I didn't follow Mark before that, and I didn't follow Twitter much. But actually, that's the thing. It's like, okay, Joe Bankman hired him. It was like the VCs, investors, they had all this information as well. All the people, regulators, all the people who engaged with FTX knew that Dan Friedberg was, had a shady past.
Yeah.
And why didn't they say anything?
Yeah, I mean, and it's interesting because this actually came up in the Deal Book interview that you alluded to, where Sam was interviewed by oh god, I'm blanking on his name, the New York Times.
Andrew Sorkin, is that
right? Andrew Ross Sorkin, who actually did. People were nervous about that interview, but Sorkin did a very respectable job pinning Sam down on quite a few things. But in that interview, Sorkin asked Sam, like, why didn't the VCs see the risk here if you at that time Sam was just like, I didn't have my eye on the ball, blah blah blah. He was making a lot of real lame excuses about risk, and Sorkin asked him, why didn't the VCs see this coming, and Sam was like, the VCs in general, and this is totally true, I mean, VCs are not incentivized to pay attention to downside risk, and very much have not been for the last 15 years or so in ZIRP, the zero interest rate environment. Taking these long bets, taking these really confident gambles on long shot things has really become the business of venture capital. And, their incentives are increasingly skewed as well, because they get to keep their whatever it is, 2% off the top right up front. And they just have to build the fund. And then the performance is just like, sorry, guys.
I would like to thank Paradex, the decentralized crypto exchange who is sponsoring this episode. Decentralized exchanges avoid you giving control of your crypto to a centralized exchange. You remain in control of your private keys, not the exchange. This means your crypto always remains in your control, so avoids the risk of FTX type fraud. Paradex's vision is to be the everything app for crypto. Spot, perps, options with deep liquidity, self-custody, and capital efficiency. Trade 250 markets on a super exchange with better than centralized exchange liquidity, institutional grade privacy, all on a fast blockchain. Paradex has a number of exciting features for traders to use, such as vaults. Vaults are where you can deposit your capital to generate passive income. Paradex has their own vault with $50 million locked up, and user community-led vaults would generate a return based on their investment strategy. But remember, guys, crypto futures options are risky. Always do your own research before investing, and only invest what you can afford to lose. This is not intended to be financial advice, and always consult a professional about your local country rules and with your regulators.
And so they wind up chasing the same few deals, and their due diligence clearly goes, in the toilet. Yeah. And Sam rightly identified that, that's just not the way the system is set up to look for downside risk. It's one of the reasons it feels very, very frustrating to be. And God, this was 3 years ago. I'm sure it's even worse now. Obviously, you have things like World Liberty Financial, where it's just right out in the open. But it's very frustrating to try and be a critical mind in an environment where there's very few incentives or rewards for doing that.
No, absolutely. I think it's
including for venture capital, including for the people who are actually managing the money.
Correct. I think it's in private markets and public markets. Sometimes it's even in public markets and crypto, whereby things are just going up. There's people who can say the prices are out of whack with fundamentals. A lot of these best investors, they
longer really means anything, unfortunately.
Yeah, exactly, right. So
the long-term prognosis for equity markets, it gets increasingly grim as this just endemic fraud becomes more and more. I mean, I was, this is the other very funny part. I'll set up a couple of things here, is that because, it's truly sickening, but because we reported on FTX, because Ian Allison got that scoop, CoinDesk's parent company was Digital Currency Group at the time, which actually had its own financial operations, and that included a bunch of loans out to FTX through Genesis. And there's 12 different Genesises, so I don't know which one it is. I don't care anymore, but they had a bunch of loans out to FTX. They got blown up, and that ended up blowing up DCG, which wound up with CoinDesk getting sold in a fire sale to Bullish, which is an exchange that allegedly wash trades its volume at massive scale and just had a huge IPO on the back of a roughly 2.5 billion Bitcoin treasury that was actually accumulated through what I think is fair to describe as a rug pull in 2018 in the EOS crowd sale, which then became Block One, which then abandoned EOS, which is the absolute definition of a crypto rug pull. So we now have these companies going public on the backs of alleged very deceptive metrics and this hidden background stuff that people don't know. That we've got a whole new generation of Enrons waiting in the wings.
Correct.
To blow 100%.
Up. And with Trump and all this, pro-crypto donors and removing of, SEC regulation, I think it goes. I think that potentially it was crypto unfriendly, the US. Now it's got swung, the pendulum swung to crime is legal. I guess that's the phrase.
Yeah, I mean, I will say, I think that I would separate those out just slightly, which is that, like, the regulation that we're seeing come via the Trump administration, I think we're still in this situation where people don't really understand crypto with enough nuance to be able to tell good from bad. And they're largely the people who love to talk about policy. And so we're getting like absurd things. Like, I mean, Elizabeth Warren, unfortunately, is a bit of a wolf crier on all of this. And so, for example, she came out and said that the Genius Act, this stablecoin regulation, would like enable further bribery of Donald Trump, and I just don't see that. I think the Genius stablecoin regulation is like pretty solid as a general principle. It's got some errors around the edges, and again, me and Austin write about this stuff. But I think that like what's happening in the crime is legal is totally true, but it's separate from the legislation.
No, it's separate for 100%.
It's like under the breath. It's unspoken, and so you have things like Tron, Justin's son.
Oh my God, Justin's son. Was it he bought $75 million
of World Liberty Financial, which is just essentially this vehicle for indirect bribing of Donald Trump, which just does not hold up to any kind of scrutiny. But it's a paper thin excuse, and
and as a result of the $75 million, his SEC court case lawsuit against Justin's son was dropped. And
I mean, that's certainly the appearance.
Appearance of
and it's unbelievably frustrating to me because, again, as somebody who's been in crypto for a long time, like, Justin's son is just a scumbag. And it goes all the way back. Like, people don't know this. I mean, maybe people know this, but like Tron's source code is a copy paste of Ethereum. And it was a copy paste of like an old version of Ethereum in 2018 that like didn't totally work. And I'm sure there's been a ton of changes since then, but like he's a plagiarist from the very beginning. And I mean, I don't mean that in a literal sense because Ethereum is open source and you can copy Ethereum if you want to, but he's also just like inept and a marketer. And I reported back in 2018 or 2019, they bought the file sharing service. Anyway, they bought a file sharing service, a really famous one. I'm blanking right now. And they were going to like tokenize it. And I talked to one of the guys who had designed this protocol. Why am I forgetting? BitTorrent. They bought BitTorrent.
Okay. Oh, BitTorrent.
Which is a very famous, very well known, very widely used. And one of the guys who had worked on BitTorrent just told me straight up, like, Justin's son is technologically illiterate. He has no idea how any of this works. And the stuff that he's saying they're going to be able to do is nonsense. And like 7 years later, it doesn't matter. He's still a billionaire and is able to like facilitate whatever shady activity is going on over there in East Asia.
He denied for a long time that he wasn't an owner shareholder of HTX and
So like.
And then
one other subsidiary
transpired
scam.
that he was 90% owner by Bloomberg uncovered, and
I'm not familiar with the details on that one, but that sounds about right.
I think it probably all these characters what we spoke about, like Sam-bankman-fried, Do Kwon, Justin's son. I think what's interesting is they have shady pasts. Individuals don't change, their character. So generally, I think that if someone is corrupt or have done shady things in the past, it's a theme in whatever they do. Yeah. And eventually, I mean, hopefully it catches up with everyone, but you know.
I mean, I think that it catches up with everybody eventually. And I think that it's interesting because one of the reasons that it caught up with Sam Bankman-Fried is, again, he's just not very smart. He wasn't very good at, like, I mean, Justin Sun is doing.
Yes.
You could say he's like doing a better version, a smarter version, a less likely to wind up in jail version of the same thing. But, you know, Sam, I think, is a good example of people never changing because, you know, there was this huge uprising at Alameda back in 2018.
Yes, correct.
Where the original co-founders and a lot of the original staff just left because they were like, Sam is not tracking any of the money. He's making impulsive decisions on trades against the advice of our actual experts. He's losing a fuck ton of money, both in bad trades that he's making impulsively because he's on drugs all the time, which we can talk about, but also literally losing money, like literally misplacing millions of dollars and not keeping track of it, because even FTX 4 years later, you know, they were basically tracking all of their expenditures using Slack messages, and they were using QuickBooks to run the company, which is just like, this was where what's his name, John Ray 3 was like blown away, was like, this is just inept. But in 2018, I'm trying to remember the name of, is it Claire MacAskill?
Yes. Macaulay, is it Macaulay?
Tara Macaulay. Tara Macaulay.
Macaulay, yeah. His co-founder at Alameda, I think.
And she was also
15 other employees went and resigned, right?
Yeah, and there were also at that time allegations of sexual impropriety by Sam Bankman-Fried as well, which turned out to be at least vindicated by the fact that he was sleeping with the CEO of his company that he owned. Yeah, so like Tara Macaulay, who I hope I'm not getting that name wrong, but she still runs a successful hedge fund in I think it's based in the UK actually now, and she's an effective altruist. She left the company, took a lot of her supporters with her. And a lot of people's theory after this big uprising about Sam's just total... And they also complained about him being dishonest, right? Like, and they were like, we can't operate with somebody who's this dishonest. And the names of Will MacAskill... Like, Will MacAskill was notified. Yes. A couple of other chief EA people were notified at the time. They didn't take any action. And you know, they... have basically tried to like deny that they're culpable in this in any way. But, you know, MacAskill after this continued being like this champion for Bankman-Fried and essentially being, I mean, I wish there was there's a politically incorrect term for this that I won't use, but MacAskill was like fronting for Bankman-Fried. He was like being out there saying like, this is a good guy. This is a philanthropist. This is, you know, somebody you should trust with your money because he's like morally correct. And MacAskill continued playing this role of being, you know, helping Sam Bankman-Fried cosplay as an effective altruist. And as a reward, organizations that not as a, I should not say as a reward, because this was not a quid pro quo, but Bankman-Fried was donating a ton of money to effective altruism to Will MacAskill's organizations. And the actual tally, I believe, was about $36 million in total went to organizations from the FTX Foundation, went to organizations that MacAskill controlled or sat on the board of, or some version of that. So, you know, he effectively was rewarded with control of millions of dollars for not calling out Bankman-Fried in 2018 when these warning signs first surfaced. And, you know, this has actually resulted in some fallout for MacAskill. And obviously, effective altruism itself is largely tarnished at this point, which is why, frankly, a lot of people in the U.S. now, including people associated with Vox, which has long, like, had a pay-for-play vertical promoting effective altruism, they're now rotating to this stuff they're calling abundance. And it's a lot of the same people, including like Ezra Klein, Derek Thompson, Matthew Iglesias, Kelsey Piper, people who were explicit boosters of Sam Bankman-Fried. And, you know, Iglesias is another one of these, the really, really problematic apologists for Bankman-Fried, because after the blow up, Iglesias was like, oh, we're like losing all of this donation money that he's been sending. And so like really like just completely oblivious and self-interested. And now they've sort of rebranded away from effective altruism. But MacAskill is still very closely tied for it. He's not going to be able to get out from under it. He's lost a lot of his leadership positions at these foundations. Nick Bostrom is another guy in this movement who they have taken away of a lot of his leadership positions of like kind of long-termist. They shut down his institute at Oxford.
Oh, wow.
And that was in Nick Bostrom's case, because at the same time as a lot of the stuff was blowing up at FTX, Bostrom was found to have made some explicitly racist remarks in EA discussion groups and rationalist discussion groups going back to the 90s. And so a lot of the ties between these people and eugenicists was really becoming explicit, which makes it all the more interesting that, you know, to circle back around to Michael Lewis, he multiple times referred to the jury trial of Sam Bankman-Fried as a quote-unquote lynching, which for those who are not familiar with the sort of history of the United States, lynchings were the extrajudicial murders of African Americans as a form of political terrorism, mostly in the 1920s and 1930s, conducted by the Ku Klux Klan.
Yeah.
And so this is Michael Lewis, like, using this, like, history of racial terrorism to try and say that his friend Sam Bankman-Fried was being like unfairly targeted by an unjust process, when in fact he was convicted by a jury of his peers based on evidence put forward by government lawyers, and is in fact not being executed, but is going to jail for what will probably be more like 15 years, even though his sentence is 25. So it all just speaks to the like histrionic panic that these, frankly, political and social elites faced when one of their own turned out to be a fraudster, and they had to really like backpedal. Because, you know, Sam graduated from MIT, his credentials and his family's credentials at Stanford had a lot to do with his success. Do Kwon was a Stanford graduate as well. And so, you know, what we're really seeing is these people engaged in what we would think of as like low-class, pump-and-dump, rug pull grifts, mass frauds, but they're leveraging their elite background to try and sell people on all of this stuff. And, you know, obviously that's a huge threat to the entire structure of fundraising in the tech world. If you start thinking like, oh, Stanford, that's the school that frauds come from, because Elizabeth Holmes, also a Stanford, not graduate, but she went there for a year. One of the recent presidents of Stanford was kicked out of his job for producing fraudulent experimental results and publishing them in journals. So, you know, it's a real problem for these people who want to maintain the illusion that they know what they're doing.
Wow. This really too much. I think that maybe we have to put this into 2 episodes.
Yeah, I mean, I think we're still under an hour and a half, so like, we're technically still good. But
no, I think it's awesome. It's awesome. It's really, now I'm really excited for your book. I think the key difference for me is that you go into the psychology and the philosophy behind Sam Bankman-Fried versus, I mean, you know, all the details, the nitty gritty, you know, the how much money is, you know, was stifling off. But the truth is what's interesting and what resonates across time is how it's so similar to other criminals and how they think and how they are, how they operate. It's similar in many ways, but I think it's also dangerously new in certain ways.
And in the fraud front, I think what's really interesting is that even when you look at like Elizabeth Holmes and maybe even Do Kwon, and certainly, you know, like Enron, WorldCom, a lot of these big frauds of the .com bubble, there are a lot of studies of white-collar criminals that conclude that basically, like, this fraud is committed often to solve a business problem. So it's to, like, resolve a crisis that is happening that, you know, these guys think they're just going to, like, do a little fraud temporarily and then fix it in the future. But that was not what happened with Sam Bankman-Fried. Alameda Research and FTX were committing fraud essentially from the very beginning. And this is what people do not know. And Michael Lewis certainly has like made a valiant effort to try and conceal this information, because he's one of these people who's constantly talking about how FTX was a great business. FTX was a great business. No, FTX's growth was fueled by the illegal borrowing, quote unquote, of customer funds starting in 2019. There was a function programmed into the back end called Allow Negative, which enabled Alameda Research to borrow customer funds from FTX way beyond margin lending controls. They were essentially immune from getting margin called, and that allowed them to go into, even as of, I believe, 2020, they were already something like $100 million in debt to FTX customers, which just means they took all that money and they were doing stuff with it. And so, there is no great business there. There was no like miracle story. Sam-Bankman-Fried was not like the world's youngest billionaire and then just like tripped over a rock.
Yeah, and it wasn't
was all
like
fake
a
from the
liquidity event. It wasn't like the prices have gone down. In fact, he was dipping into the reserves while we were at the top of the bull market.
Yes,
when, in the 2020, like you said, it started from 2019, 2020, and 2021 when the market was rallying.
And the terminology that was used a lot, you were talking about the kind of like that period from November to early December where the criminality was unclear, and the term that was used a lot, and I called this out in the column that we mentioned, is they were talking about a bank run, right? Like a run on the bank. And, this was, I'm 46 now, and it's become a very depressing reality that like you reach a certain age and you just realize that nobody knows what they're doing. And a lot of the people who have been elevated to positions of prominence in society are in fact morons. This use of the bank run language throughout the coverage of FTX after its collapse is just, it's unconscionable, because a bank is subject to a run on the bank because it holds your deposits and then puts that money to productive use in loans, and basically loans, unless you're like an investment bank, and that's a different thing. But you can have a run on the bank because you have loans out, and then suddenly you have customers who want their money back, and that becomes a run on the bank. FTX was not a bank. FTX was an exchange and a custodian, and there were no formal custodian laws in place at the time. And hopefully we get a U.S. market structure bill that will establish crypto custodianship as a practice that has clear red lines and that will separate it from platforms that are for trading. But FTX was supposed to just hold on to these assets for people. It was not supposed to be lending them out on margin. It was not supposed to be investing them in Anthropic. It was not supposed to be making venture capital investments that are illiquid on a short time horizon. And the fact that anybody regurgitated this without seriously calling it out, the New York Times or the whoever, is just negligence of an unbelievable category. And so this bank run terminology is why people were confused about, and he was successful briefly in
he was successful, people. And I that's what in fact I listened to Dale Brady, and this is something which
Brady Dale,
Brady Dale, the other author, and you hit the nail on the head, as in your book, and your understanding is perfect. I think that he didn't understand because I believe he said that Sam Bankman-Fried was addicted to PR, so he was going on this media tour. That's 100% incorrect. I mean, I lived it, you lived it. I believed he wanted to portray the fact that there was a bank run, there was a margin call. It was nothing. It was because of this. He wanted to muddy the waters, so the normal people did not understand what was going on. And he was successful because I actually went on multiple interviews and I had to keep on clarifying that FTX was a custodian. It's an exchange. If everyone took all their money out, all their digital currency, all what would be left is the exchange's reserves. That's it.
The very basic financial understanding that, like, okay, you've got all my Bitcoin goes down 50%. And Sam was like, oh, the crypto market crashed, that's why we got blown up. No, like, the crypto market crashing should have zero impact on the liquidity of your customers' holdings, because that BTC is still there no matter how much it's worth in dollars or not. And the failure of the financial press to immediately understand this was just like unbelievable to me.
Unbelievable. Yeah.
This is why it's so sad that CoinDesk has been bought out and hollowed out, and all of the senior leadership who were responsible for shepherding this story are just gone. Myself, Nick Baker, Mark Hochstein, Kevin Reynolds. CoinDesk basically does not. Ben Schiller has now departed as well. Right. CoinDesk effectively, the CoinDesk that exposed FTX does not exist anymore. There are a lot of great reporters still doing work there, but it's not what it used to be because it has been turned into yet another shell game of PR and whatever. So but I was shocked by the lack of understanding in the general audience. And of course, nobody went again further than Michael Lewis in perpetuating this bank run idea and also like normalizing this idea that he took his customers' money and invested them and being like, oh, he's a genius investor. And even at trial, the defense tried to be like, oh, we need to talk about this Anthropic stake that's now worth $500 million, which, by the way, is just like he took money from one Ponzi scheme and pumped it into another because these AI companies are not making any money either.
Yeah. And now, I mean, it's still customer deposits. I mean, whatever it's worth, he's stole the money from us, put it in Anthropic, like $500 million, went up to whatever 18 billion. I don't know how much the stake is worth. The stake.
And I'm paraphrasing, but the judge, even at trial, disallowed the defense from talking about this stuff because, and this is, I'm more or less quoting him directly here, but he said, if you rob the Federal Reserve and you take your money to Vegas and win and then pay it all back, you still robbed the Federal Reserve. And I think, his point is there's a couple points there, and one is the obvious one, but the other one is that, like, Bankman-Fried really was just gambling with people's money, and he did not understand that. I mean, Sam Bankman-Fried was a compulsive gambler above all. And this is where the perception of his genius and his, like, interest in mathematics was just as bad as the perception that FTX was like a bank. Sam Bankman-Fried was not a mathematics genius. He did not even really like have a deep understanding of mathematics. What he understood more intuitively than academically was probability and quick decision making. So he was a very skilled odds maker and gambler. Like he was literally like, if you've seen Casino, right? Like Robert De Niro's character in Casino, he knows the line. He knows, how to stay over and under the line and give people the right rates so that he always wins in the end. There is a lot of good stuff in Michael Lewis's book, even if Michael Lewis completely misperceives it. And one of them is when he was working at Jane Street, Sam was being taught how to think in bets. And the way that they did that is all of the interns were encouraged to competitively bet with each other, to construct bets that everybody would lose except you, for example. And Sam was really good at this. And he would humiliate people and aggressively make people look stupid by constructing these elaborate bets where he could see the bigger picture and knew that he was always going to win by playing different odds off against each other and hedging in certain ways. And he did stay really good at that as a trader and as an investor, but that's not the same thing as understanding technology. That's not the same thing as having a genuine vision for the future. And ultimately, all of the expenditures that he made with the money were bets on this long-term future. So all of his political spending was I'm going to create this political influence machine that's going to make me important so that I can earn more money later. Yeah. So that's a leveraged bet on politics. He gave $500 million to Dan Kives and K5, which is this Democratic donor who's also a talent manager who connected him to Katy Perry and people like that. And that was this leveraged bet on future influence. And so it's all I'm gambling. I'm taking big gambles and I think I'm going to win, but then he didn't, obviously. And so everybody's money was gone.
It's very fascinating. But I mean, glad he's put away anyway. But I mean, now there's a lot of people coming up to his hearing. They're trying to say, okay, he's a great VC investor. No, he was, like you said, he's just taking a gambled bets, and some of them paid off because the market is, everything's gone up. It's not his money. He took big bets, and
it is, everything's gone up, but it's also, this is a larger system. This is a lot of other people who are making these directional bets on things at the same time. And it's kind of a social alignment thing. I mean, this is why I mean, AI is only going up because everybody has decided that AI is good and should go up, and everybody is putting their money at the same time. And the actual results are pretty shaky so far. So
yes, exactly. No. I mean, everything eventually comes back to reality. So just like crypto markets every 4 years or so, and the stock market. I mean, it's so interesting times. No, I'm excited. No, you have to come on again closer to the time. I'm really
I would love to.
excited. And you were doing a lot of you saw some other trials, and you're doing some more work for other exchanges, aren't you?
So I'm in a very interesting position. As I think some people know, I was laid off from CoinDesk about 2 years ago, almost exactly 2 years ago, actually, ahead of it being sold because Digital Currency Group got blown up because of our reporting. And so I've been very, very fortunate. I've managed to essentially, like, I do contract work, I do communications consulting. If anybody wants some advice or needs guidance, please reach out. My company is called Trithemius Strategic Communications, named for Johannes Trithemius, the 14th century monk who did a lot of the work of introducing encryption to the West, so secret communication. So I really work a lot on privacy stuff. I am also helping expand and essentially co-found a privacy-focused publication called The Rage, which we've done a lot of reporting recently on the trial of Roman Storm, one of the creators of Tornado Cash.
Wow.
It's too complicated to get in to depth here, but his case has serious implications for the U.S. First Amendment and for freedom of speech and for the freedom to create code. Like, unlike Sam, Roman actually built something that matters and is being criminally prosecuted for it. And I also reported on a much more fun, frankly, low stakes and low brow fraud called SafeMoon, which the CEO, John Caroni, was found guilty of criminal fraud a few months ago. That one's I reported out for Protos.com. It's interesting because his parents are linked to the CIA, which is another small topic of my book about Sam. And I've been very fortunate to do this, that, and the third over the last couple of years while finishing this book. And I've had some great clients, and I appreciate.
So I mean, we'll put your Twitter, and everyone follow David Morris and reach out to him directly. It's a must follow. Future celebrity in a couple of months. So, I'm a mini celebrity now, future major star. So,
I will say I have been really gratified by, a lot of people have read portions of the book, and I've gotten amazing feedback, and the community as a whole is just like really gnashing at the teeth to get this book, and I'm excited. I think it's going to have some impact. I mean, it's not, I hope it's well written, but it's also, it is long, and it is sort of technical, and there's also some weird French philosophy in there. So it's a book that you are going to want to spend some time with, and it is up for pre-order now on Amazon. Stealing the Future.
Oh, fantastic! So we'll put that put the link down below as well for everyone to pre-order.
And pre-orders are really, really helpful for, not that we're necessarily going to make a bestseller list with this one, but it would be great.
No, I think so. I'd love to see. At least we kind of get the truth out there, right?
Yeah, we're working on it. Especially because, if I could say one last thing, we have these Netflix, and there's like another project, I believe, about FTX coming out soon. And unfortunately, I'm not sure whether the one that's actually licensed from Michael Lewis's book has made much progress. That one, supposedly, I think Lena Dunham is writing a script. And I mean,
that's not going to be.
Well, I don't know. I've come around over the last 15 years. I've really come around on Lena Dunham for one thing, and I think that she could do an interesting job. But
do you think? I mean,
the source material is a problem. Yeah, because I think Michael Lewis is never gonna come up for air on this one.
Right. Absolutely. I think that he's definitely not. I mean, especially with the Netflix coming out and Amazon and Prime, as well as the movies.
Yeah,
you have to.
And I think that for a little while he might not be affiliated anymore, but I think Adam McKay, the director of The Big Short, might have been affiliated with something for a minute, and that would have been funny because it would have been like look at all of these incompetent boobs.
Yeah.
But unfortunately, the reality, like the incompetent boob angle is already sort of a cover for something that was actually considerably more sinister, I think,
I know, nefarious.
Was going on.
Right from the beginning.
Yeah.
It's not, yeah.
And so I'll be curious to see how those shows turn out. We'll see.
No, I'm really, really curious. Fantastic, good stuff, David. I really enjoyed it, and definitely will have you back. So everyone check out all the links below.
Before we go, though, I have to ask you one thing. Yeah. You have gotten some recovery, right, from your losses, right?
Yeah.
So
I'm very So we got my claim was when FTX went bankrupt, so 1.8 million pounds, so significantly more in dollars now. And we got over that. Our claims over $50,000 get paid about 72% back. I think over the time we'll get maybe. But the key thing to remember is that
So wait, sorry, is that total? Like, is that 72%? Is that going to be what you get in the end?
No. I think eventually it will be 150% recovery, 180% potentially. But remember, the key is that this is benchmark at the lows of the bear market on the 11th of November 2022. So Bitcoin was trading at $15,000, Solana trading at $8, and Ethereum trading at $1,250. So majority of my 1.8 million pounds was in Bitcoin and Ethereum, and now they're trading at Bitcoin is what, at over $115,000, $116,000. Ethereum is at nearly close to $5,000. So yeah, I mean, it's now like 10 times nearly the worth now.
Rough.
I mean, like
the not just the bottom of the bear market, by the way, but like after FTX's own crash had tanked the market, then that's where your bankruptcy effective date is, and that's just like, man, he did so much crime that he got a discount on repaying his victims. Is how I think about it.
Yeah, no, that's well put. Exactly. Yeah. It's awesome. Fantastic. So everyone,
thank you so much for having me.
Yeah, thank you for coming on my show, and everyone follow David, reach out to him directly, and look forward to seeing you guys again soon. See you, David.
Cool. Okay. Thank you.
Thanks. Thank you. Bye-bye. Thanks so much, guys, for staying with us today. Make sure to let us know what you think of the episode in the comments section below. Also, make sure to turn your notifications on and subscribe for our next episode. See you all soon. Bye, guys.